Some morning, awesome morning to you. I celebrate every one of us for turning up this morning, as always, to be on this call. I want to appreciate you all. Have you ever imagined that there's going to be an emergency in your life? Something that you need to quickly attend to, something that you need to quickly see to. Sometimes medical, sometimes loss of jobs, sometimes, it can be something with the car you need to treat. So emergency comes up. So it will be kind of ignorance or a kind of session this morning. And I hope you're going to have the very best of it, because we're going to be going deep into how to prepare your emergency reserve fund. We've been talking on some other general talk that we've been having, how to become a financially intelligent pays you that they are going to disturb. So you share it now. Let's get people involved. Let's tell them that we've started and they have a lot of things to gain in this. So for those of you that are joining us for the first time, chartered accountant, investment advisor, and also a life coach. And over this period, and we are on a 90 days trading session packed with information on how you become a financially intelligent parent. We cannot afford in this era to hand over to our children the same template that was given to us. When we were growing, read your books and things, fine, we had that. Most of us read, and most persons that read, they know where they this generation is dependent on how you're going to do it. You see, in that era, when we used to have the industrial era, what do we call it again? In this, even the information era is going already. Where we are now is the digital space. We are in the digital era where everything is done digitally. The way our parents were thinking then should be we should be thinking differently, totally and absolutely different. At or what we've been looking at is, how do you become a financially intelligent parent? How do you become? What you don't know, you can't give. Are you aware of that? This is a live session, and I will appreciate. I think we're working. Mr. Kenny B, I can see you there. I can see one or two persons. Just drop one or two comments there in the comment section so that I know that you are on the call. All right. This is a live session, not recorded. So, okay. Don't mind me. So when I break, I know I'm breaking. It's a live session, and just so. Okay. So talking about the importance of the information, please, I think I hope you can hear me clearly from your end. If you just can't hear me clearly, if it's streaming well at your end, just give me a feedback, put a thumbs up, or just type in good there. Just type in good or put a thumbs up somewhere there. All right. So now talking about the financial intelligence, all right, that's when we look at our own children, what is it that we're going to be doing differently? In those days, when they tell you that, oh, you have money, what will you do? They say, oh, go and build a house. I'm going to build a house and give my children a house and things. But today, we know that house is not the only kind of asset. Today, people hand over digital assets to their children. Not only the house anymore, not only the land anymore, but many of us are still, when we are looking at in this era is, what can you do differently to give your children peace of mind, to give your family peace of mind? And one of the things that you can do is to acquire that financial intelligence. That financial intelligence will help you a great deal. All right, I said this so that we could just get you settled in, and then we can just proceed on the training. Right. When we started with the definition of success. And we said success is the progressive realization of a worthy ideal. Success is the progressive realization of a worthy ideal. So when you say the progressive realization, that means there's a goal somewhere that you are working towards. There's something that you are working towards. So, my friend, what are you working towards in this year? And one of the things that I can tell you to work towards is setting up what we call an emergency reserve fund. Emergency reserve fund. This is going to be for yourself, for your family. You are not saying it's not money that you are spending. You are using it to preserve the future. How many of us knows when anything will happen? We don't know when anything will happen. We only pray that Almighty God will preserve us. Just look at something that happened, just got with by is just will I just with great sympathy to the people in Los Angeles. Look at a lot of big houses. Nobody thought of that Hollywood town can go on fire. And look at the kind of properties that went down there, billionaires' properties and things. Now, let's look at this. If someone has attained that level, billionaires, those places are where billionaires live in. If those places can have such a situation that they couldn't control, now what do you think will become of most of them if their houses are not insured? What will become of them? Have you kind of imagined that? What will become a whole estate of over $500 million razed down by fire? If this person does not have it, and I don't know how much insurance is going to cover, how much insurance is going to cover in all those properties. But I think, man, to some extent, when it comes to natural disaster, there's a level that insurance will cover. Now, just imagine if those persons don't have what we call the emergency reserve themselves together. Do you know that a lot of them are religious also? Most of them, they pray to God, and this happened. So that you are spiritual does not take away your responsibility from you. So I want to encourage you, pay attention to this training. And for those of us that have not watched the previous one, we talked about budgeting. We've talked about budgeting, why you need to, have a budget for your family and teach your children how to do the same. And we talk about the 50-30-20 budget rule. Also, it was when we were talking about the 50-30 budget rule that we now talked about the emergency reserve fund. It is a different thing from your normal thing. All right. So please, if you are a first timer, can you just click on the subscribe button so that you get the subsequent episode as we continue to go on? Click on the subscribe button, and please, I want you all on the call, click on the like button so that the algorithm will help us send these messages to people that need this kind of message. Just smash the like button right now, guys. Click on that thumbs up button. Just click on it. All right. So now let's go. The emergency reserve fund. Emergency. Fine. Something that you did not plan for. You didn't think about it. Nobody plans that, oh, emergency is going to happen today, so this is my money for emergency. Most people don't do that. Then reserve. What is the meaning of reserve? Reserve is something that is set aside. Something that is put aside. Reserve. And then fund. Of course, fund is money. So by mere saying that word, you understand what emergency reserve is advised. By the rule, it says that your emergency reserve fund should be 6 times your monthly expenses. Your emergency reserve fund should be 6 times your monthly expenses. Now, what do we mean by that? From the time we did the budget, when we said prepare your budget, you see everything, it's step by step. We introduce you to the budget so that you know how to do the budget, to be able to put up your expenses, your income, your expenses, and so on like that. So now from your budget, you know what your income is. Income is based on the money that is coming to you. Your expenses are the money going out. Your emergency reserve fund is not based on your income. It's not based on your income. So let's say, for instance, you earn 1 million naira monthly. 1 million naira monthly. It does not mean that you have to provide 6 times your monthly income. Where are you going to get that from? 6 times your monthly income for your emergency reserve fund. No, emergency reserve fund is based on your monthly expenses. Remember, in that monthly expenses that you when we did it, in the monthly expenses, remember we had just a minute. Okay, I just wanted to be sure that the mic is playing. All right. Okay. In the when we wrote down our expenses, remember you had your rent, your medicals, a lot of things, your house, your groceries, and everything were inside that expenditure area. I hope you remember that. And most of you, not you should. It's not that you should remember. You should have it by now. We gave the template that you should use. We gave you a link to download the budget template. So I expect that by now most of us will have done that. So now that's your expense. That place where you have your expenses, it has covered a lot of things, including car repair, total expense in a month. Please remember, the total expense in a month, apart from your rent, remember the children's school fees is in that category also. I hope you get it. The children's school fees is in that category, because remember when we were preparing the budget, we said divide all your yearly expenses, divide it to monthly. Divide all your yearly expenses, put it to monthly. If you have not done this exercise, I don't know what you are doing on still doing in the program and you are still looking forward to. So let me just continue, because it's going to be painful. I wouldn't smile at you if you have not done that. Okay, so we said you're going to take your yearly expenses and break it down into monthly. Your yearly expenses, break it down into monthly. So every expense that you have is covered. Now, let's say my income is 750,000 naira. Maybe by the virtue of the business I do, the total profit that the part of profit that I pay myself, I'm talking as a businessman, maybe the part of profit, because the profit you make in your business is not your money, is for the business. So the business has to pay you. The business has to pay you. So I think there's one of our topics, we're going to have something like that, how you prepare your small business and the financing of your small businesses. All right. So the business pays me 750 naira, or I earn a salary of 750,000 naira. Now, in that amount, there is the amount that I spend. According to my budget says I spend 500,000 naira monthly. All expenses covered. 500,000 in this, or 600,000, whichever it is. So let's say I spend 600,000. What the system says is this: for my income times 6, which is about 3.6 million. Please, I want you to follow it. I actually have some slides for this stuff, but kind of got up early to try to see how to match, because we try to use another different software for streaming for better quality, and I couldn't get the presentation up. But don't worry, I will still, if you're on the channel, if you're in the channel, I'll be dropping a standalone training, a video where we'll be doing some fiscal calculation. But that means you should write some things down in this live presentation. You should write some things down. All right. So 600,000 is my current monthly expenditure. 600,000. Now, my emergency reserve fund is going to be 600,000 times 6. Some people make it even a year, but at least let's start with 6 months. Now, let me show you something, what is going to do. Please, I hope you are writing. Just write this down. My expenses is 600,000. And I've made provision for times 6 of my monthly expenditure. That gives me about 3.6 million naira. What it means is this: in case of an emergency, and emergency, just like we said, can come in any form. In case of an emergency, I have 3.6 million naira somewhere that I can fall back to. Your first point of call, you see, one of the things that kills men, one of the things that make men to comes, the pressure is so much. You fickle out, you begin to run helter skelter. And unfortunately, maybe the people that you so much depend on, that you feel, oh, if I call them, they are going to help me. Those people, they, as at that time, they might be going through one or two challenges themselves, and they are not ready, they will not be in the position to help you immediately. So your emergency reserve funds should be that kind of the first point of call. Your emergency reserve fund should be the first point of call. So in case of an emergency, before you begin to man is a social animal. You understand? So you are not meant to carry it alone. Somebody will help you somewhere. But at times, the help might not come as quickly as you need it. So wisdom bestows you that you should make provision. So wherever, it doesn't matter where you are in the world. Oh, there could be social security, there could be this and this. Make your own personal provisions first. So 3.6 million, if my monthly expense is 600,000, my emergency reserve fund should be 6 times what my monthly expense is. That's 3.6 million. That is all. Now, the next thing is this 3.6 million. How am I going to get 3.6 million to put in an emergency reserve fund? And mind you, the emergency reserve fund is different from your savings account. It's different from your savings. Don't mix them together. It's different from your savings. It's different from your investments. Your emergency reserve fund should be kept. One of the attributes is this: it should be kept in a liquid or next to liquid form. Do we get it? Your emergency reserve fund should be kept in a liquid or next to liquid form. Now, when we say liquid or form, in under assets, we have what we call fixed assets, we have what we call current assets. Fixed assets are something like your land. Then you have your current assets. What are current assets? Current assets are those assets, they are not, let me just put it in that term, they are almost like liquid asset. They are the ones that you use quickly, you can turn them over, like gold. Do you understand? We have something like gold. Under it, we have, because gold, if I save my money in form of gold, a lot of persons are doing that now, buying gold. They buy gold not because they want to become they wear gold up and down and things. They want to buy gold because they want to use the gold for, as a what we call a store of value. So amongst it is also what we call the money market. The money market also is a liquid market where you can put in your money and you can quickly get. So emergency reserve fund should not be put in fixed asset. Don't use your emergency reserve fund to go and buy land. If the emergency comes, how will you liquidate immediately? I hope you're getting it. Please, if you are getting me, please type I get you. I get you. I want you to put it in the chat box. Type I get you. All right. Now, how do you go about generating that 3.6 million? Let's go to that quickly. To generate the 3.6 million is this. I'm talking of, I use the example of 600,000 and then 3.6 million. To generate the 3.6 million, you are going to set a goal for yourself. How soon do I want to generate this money? All right, thank you very much. Okay, great. I just want to be sure. Now, how soon do I want? It's a goal. You didn't keep 3.6 million somewhere. Neither are you saying, oh, you will hit a contract that will give you that 3.6 million. So what I want to do is, I'm going to give myself a space of 6 months, a space of 12 months, a space of 18 to build my emergency reserve fund. Ladies and gentlemen, please, I plead with you, create this fund for yourself. Now, if I decide that in the space of 24 months is what I want to use to create this emergency reserve fund, what I'm going to do is this. That 3.6 million, I will divide it by 12. 3.6 million divided by 12. Now that that's going to give me about 300,000 naira or something. About 3.6 million divided by 12. That should give me about 300,000 naira. So what it means is this: every month I want to set aside. Remember, this is a goal, and remember our definition of a goal: the progressive realization of a worthy ideal. The progressive realization of a worthy ideal. So if I say I want to do 3.6 million, I want to get out 3.6 million in 12 months. So I'm going to say 3.6 million divided by 12. But that might be too harsh on you, because how much is the total money? Your total income is about 750,000. So you want to give yourself enough space. You want to give yourself an ample space. So let's say 3.6 million divided by 24. Let's give it like 24 months. So that's going to give us about 150,000 naira per month. That means every month, I want to set aside 150,000 naira for the period of about 2 years every month to build my there. And as I told you, it's not an account where you have ATM. It will be difficult for you to. It's not difficult. Not when I say difficult, please understand. It is not. Let me just say, it is not easily accessible by you. It's not easily accessible by you. Emergency reserve funds now that people can put. Oh, I'm creating, because when we teach it, we have to give people how to do it. We run the cooperative activities, but this one, we are going to say, okay, you have an emergency, you want to create your emergency reserve fund. That one is not subjected to remove 10% or anything. That one, as you put it, that's how you get it, and you understand. More of it will be said in our own class. So you put that aside. So every month, you set that money. Every month. Apart from that, remember, when I said my salary is 750,000 naira, or my business profit is 750, and here I'm talking about the emergency reserve fund. 10% of what you earn is yours to keep. You remember that? 10% of what you earn is yours to keep. So if you are earning 750,000 by law, or by whatsoever you want to call it, that will help you and your future, you have to set out 10% of that 750,000 for yourself. He said, pay yourself first. Pay yourself. Always learn to pay yourself. Because when you don't pay yourself, in the future, what's going to happen? That body cannot generate the same income. So that's 750,000. 10% of 750,000 is 75,000 naira. That one should go into my savings and investment account. It should go into my savings and investment account. But when I look at my emergency reserve fund, because of the goal, this one is like a project. If you have been doing it before, you don't need to, but now it's a project that you're embarking on. And for every project, there's a kind of sacrifice that goes with it. So with this, I'm going to look at, apart from the 750 that I put in my savings account, I'm going to give a standing instruction to my bank that send 150,000 to this account where I have my emergency reserve fund. And on no account, I tell you, on no account should you say, I want to go take it if it is not an emergency. So how will this help you? One, it will give you mentally, you will be relaxed. In the case, in a situation of any challenge, you know that there's something, at least in the immediate, to fall on. Number two, you're going to be helping your children to know how to, and for you to preserve your future expenses. So one is going to be teaching the children financial discipline. Now look at, depending on what your income is, look at the amount of money we've said you should set aside. set this aside, set this aside, and you'll be looking, what am I now going to live on? You will live. You have to stem down on some expenses. I said it, if you have not watched the last training, the 50-30-20 budget rule, how you can prune down your cost drivers. You need to prune down the cost drivers of today so that you can have a vehicle that will carry you tomorrow as far as cost is concerned. So you need to cut them down. It has to be intentional as you build your emergency reserve fund. So, ladies and gentlemen, I want you to look at this as a project that you need to embark on, as something you need to teach your children how to create the emergency reserve fund. Set up a dedicated account to it. You are not touching, you are not going to touch that account. That account will be like almost like the pension, this pension account. You don't have access to your pension account until you are retired or something and so on. So you're going to treat that money like that. And I tell you, it will help you a great deal. So, ladies and gentlemen, at this point, I want to encourage you, if you are yet to subscribe, what are you waiting for? You look at this content every day. For the next couple of days, we'll be coming in with new things as far as financial intelligence is concerned. This is part of financial intelligence, helping you to secure your future, your financial future, and the financial future of your children. If you got some value on this call, just type value, And for those of you that are new on the call, one of the ways you can put value is click button and click on the like button. Guys, you just watch. It's not going to cost you anything. It's not going to cost you anything. It's going to make the algorithm to continue to suggest even similar video, all right, and then share with your friends. I hope to see you again in the next episode. As at the time of this recording, today is Saturday, and we don't run on Sunday. We run Mondays to Fridays for the next 90, or we still have about 80 days or thereabout to run on this financial intelligence journey. So I want to say a big thank you. I wish you a wonderful weekend. Yes, I can see, Kenny, great, Mr. Yusuf, Mr. Salau, I can see you there. Gladys, oh, awesome. It's nice to have you on the call. I celebrate each one of us. I pray that as we learn, our finances will change for good, and it will impact on the future of our children. What we're still going to do, there's still a lot that we're going to talk about. How to create cash flow for your children. All those ones will come later, but we need to build the foundation. Once again, it's my pleasure, your friend and partner, Olushola Popola. See you.